Coinbase stunned the cryptocurrency world on Tuesday evening by announcing that it would add full support for Bitcoin Cash, a payment network that split off from the mainstream Bitcoin network in August. Coinbase users can send and receive Bitcoin Cash coins, and they'll soon be able to buy and sell them as well. The news sent the value of Bitcoin Cash soaring more than 30%, from $2,800 to $3,800 per coin. Trading on Coinbase's cryptocurrency exchange, GDAX, briefly showed a much bigger gain, with Bitcoin Cash prices as high as $8,500 before trading was suspended. Other exchanges have not shown Bitcoin Cash prices that high, suggesting that these high prices may have merely been a technical glitch. At publication time, the price of Bitcoin Cash was around $3,300. Meanwhile, the price of conventional Bitcoins fell from $17,800 to less than $16,000, a decline of 10%, in the wake of the Coinbase announcement. It has since regained some ground and is now worth $16,800. Markets reacted strongly to the news because Coinbase's endorsement could provide a big credibility boost for Bitcoin Cash. Bitcoin Cash supporters have been arguing with supporters of the conventional Bitcoin network over whose version of Bitcoin better reflects the vision of Bitcoin founder Satoshi Nakamoto. Coinbase has millions of users, many of whom haven't ventured beyond the relatively safe confines of the Coinbase service. They now have the option to purchase Bitcoin Cash alongside the other cryptocurrencies Coinbase supports, regular Bitcoins, Litecoins, and Ether. The Bitcoin community has fractured into two rival camps with dramatically different visions for Bitcoin's future. Advertisement. The issue that has divided the Bitcoin world is over the best way to scale the Bitcoin network, which is built around a list of transactions called the blockchain. Every 10 minutes, on average, the network adds a new block, and blocks are limited to 1 megabyte, which has translated to around 2,000 transactions per block. For years, one faction of the Bitcoin world has advocated increasing that 1 megabyte limit, which would allow the network to process more transactions per hour. But others objected, arguing that larger blocks would drive up the storage and bandwidth requirements to fully participate in the Bitcoin network. That, they argued, would undermine the decentralization that is Bitcoin's most important virtue. This small block faction has advocated an upgrade called segregated witness that went into effect earlier this year. It allows a more efficient transaction format that could roughly double the blockchain's capacity if it becomes widely used. But even with that upgrade, demand for the network has been outstripping its capacity, leading to soaring fees and other problems. The fight came to a head in August when a group of big blockers created a new version of Bitcoin called Bitcoin Cash. Bitcoin Cash supports blocks up to 8 megabytes, and its creators are committed to further block size increases, as needed, to avoid congestion problems. There have been many Bitcoin spin-offs in the past, but this one was unusual because it forked off from the existing Bitcoin blockchain. Prior to August 1st, the Bitcoin and Bitcoin Cash blockchains are identical. This means that anyone who owned 1 Bitcoin ahead of the fork on August 1st suddenly owned 1 unit of Bitcoin Cash after the new network launched. And surprisingly, the split seems to have created billions of dollars in new wealth. The price of regular Bitcoins didn't fall significantly when Bitcoin Cash was created, while newly minted Bitcoin Cash coins became worth around $600 each. Since August, the value of all Bitcoin Cash in circulation has soared from around $10 billion to $60 billion. After Bitcoin Cash launched, the mainstream Bitcoin community continued arguing about whether to increase the size of the regular Bitcoin blockchain. A deal announced in May was supposed to pair